Ever wondered how Warren Buffett, one of the world's wealthiest individuals, amassed his fortune? It's not just about wise stock picks or business acumen. Believe it or not, Buffett has lived in the same unassuming house in Omaha, Nebraska since 1958, a testament to his unparalleled frugality. This choice is just one of the many reflections of his deeply ingrained financial principles. Dive deep with us into the top 5 indispensable financial lessons from the Oracle of Omaha himself. You'll uncover why Buffett shuns extravagant lifestyles, steers clear of crippling debt, and emphasizes long-term gains over quick financial fixes. Whether you're a budding investor or just looking for ways to secure your financial future, these time-tested insights from Buffett will be your guiding light. Discover why starting early and making informed decisions can set you on a path where someday, just like Buffett said, someone's sitting in the shade today because someone planted a tree a long time ago. Be sure to stay until the end of the video, where I reveal the most important of his 5 lessons. Before we get started, if you'd like to join a stellar investing community, sign up for a premium membership at the link in the description below. Unlock the secrets to formidable investment gains with a premium investing membership. Dive deep into potential multi-baggers, stocks primed to soar by hundreds or even thousands of % over time. With real-time updates on a genuine money-diversified portfolio, exclusive market insights, educational content, and a weekly newsletter packed with actionable strategies, it's time you elevated your investment game. Don't miss out. Join the inner circle of informed investors now. Let's get started. Number 1. Living beyond your means. Living beyond one's means can lead to financial insecurity and unnecessary stress. The pressure of contemporary society pushes many towards constant consumption, where individuals find themselves acquiring more than they can afford or even need. Even those who amass significant wealth are not immune to this temptation. However, Warren Buffett's unyielding commitment to frugality, even amidst unparalleled affluence, highlights the value of resisting such pressures. His decision to live in a modest house, despite having billions, isn't merely about resisting luxury. It's a testament to his belief in sustainable living and the avoidance of excess. Warren Buffett's financial choices provide a beacon for those seeking long-term prosperity. His simplicity doesn't stem from a lack of ability to indulge, but rather from an understanding of the fleeting nature of materialistic pleasure. By opting to avoid the siren call of needless extravagance, Buffett demonstrates that true contentment isn't rooted in possessions, but in wise decision-making and recognizing the difference between needs and wants. His enduring financial principles serve as a reminder that longevity in wealth comes not from what we accumulate, but from what we judiciously choose to forego. Number 2. Living lavishly. Living luxuriously is an aspiration for many. The glitz and glamour that come with luxury items, high-end experiences, and exotic vacations can be immensely satisfying, signifying to oneself and others that one has made it. The rich textures of a designer dress, the exhilarating speed of a sports car, or the serene ambiance of a private island escape are all part of a dream that society has been sold on. Yet, beyond the sparkling facade of lavish living lies a precarious financial tightrope. While these indulgences can certainly enhance the quality of life and offer unparalleled experiences, they can also insidiously erode one's financial foundation, if not balanced with prudence. Luxuries, by their nature, are meant to be occasional treats, not daily habits. When they become the latter, they risk becoming burdens rather than joys. Recognizing the difference between desires and necessities is crucial in the pursuit of both financial well-being and life satisfaction. Frugality is often misunderstood as a sacrifice, but in reality, it is an empowerment. It's about making informed choices that align with one's long-term goals and values. By selectively indulging in luxury and being mindful of one's spending habits, individuals can experience the best of both worlds, moments of sheer delight without compromising their financial future. This balanced approach to consumption ensures that the joys of today don't come at the expense of tomorrow's peace of mind. Through judicious living, one can enjoy the thrill of luxury and also build a sturdy foundation for enduring financial health. Number 3. Chasing short-term gains. In the dynamic arena of finance, the temptation of immediate returns often proves too compelling for many investors. The volatility and unpredictability of markets, coupled with tales of sudden riches, can draw individuals into a high-stakes game of predicting market peaks and troughs. This method, known as timing the market, is like trying to catch a falling knife. It's perilous and often leads to dire financial consequences. The sporadic success stories of those who have profited quickly can overshadow the multitude who experience substantial losses from such speculative ventures. Contemporary investment trends can appear lucrative, but they are often bubbles that eventually burst, leaving latecomers in a quagmire of regret. Warren Buffett, with his vast experience and unparalleled success in the realm of investing, advocates for a markedly contrasting strategy. Eschewing the whims of market fluctuations, he preaches the gospel of long-term investment. When Buffett asserts our favorite holding period is forever, he is emphasizing the profundity of patient capital. His approach isn't swayed by the sizzle of short-term trends, but is firmly rooted in the tangible merits of a business, its fundamentals, its long-term potential, and its intrinsic value. This philosophy demands meticulous research, a deep understanding of the business landscape, and most importantly, unwavering patience. It's a vision that perceives investments not as ephemeral gambits, but as enduring partnerships with quality businesses. In adopting this mindset, investors don't ride the erratic waves of market sentiment. Instead, they anchor themselves to the bedrock of true business value, ensuring stability amidst the financial tempests. Number 4. Taking on high-interest debt. The world of finance offers a double-edged sword called debt. When wielded wisely, it can amplify returns, but when mismanaged, it can lead to an individual's financial downfall. Warren Buffett, despite being an astute financier capable of leveraging debt to his advantage, harbors a deep caution towards high-interest liabilities, particularly those akin to credit card debts. Such high-interest obligations have the insidious ability to gnaw away at one's finances, rapidly diminishing wealth and pushing the dream of financial independence further into the horizon. Buffett's reservations about such debts aren't merely theoretical. They come from keen observation and decades of experience in the financial realm. He poignantly remarked, "I've seen more people fail because of liquor and leverage being borrowed money." This statement serves as a stark reminder of the perils of excessive borrowing, especially at exorbitant rates. It underscores the importance of not just borrowing prudently, but also understanding the profound implications and responsibilities that come with it. In Buffett's world, it isn't just about making money, but ensuring that one doesn't inadvertently dig financial pitfalls that become impossible to climb out of. Number 5. Not starting early. In the complex realm of finance, time is often likened to an invaluable asset, more treasured than the finest gold. This sentiment is especially prominent in the teachings of financial maestro Warren Buffett, who places the enchanting principle of compounding at the forefront of wealth accumulation. With a simplicity reminiscent of a snowball's descent down a hill, gathering volume and pace, compounding silently transforms modest seed investments into mighty financial oaks over extended durations. Buffett's own journey serves as a vivid case study. By diving into the investment waters at a remarkably young age, he was able to maximize the efficacy of this principle, giving his investments the ample time they needed to burgeon. Drawing inspiration from the tranquility of nature, Buffett beautifully encapsulates this philosophy by noting, "Someone's sitting in the shade today because someone planted a tree a long time ago." This analogy underscores the essence of long-term investments, emphasizing that just as trees necessitate years to offer shade, investments demand time to yield abundant returns. Amidst today's fast-paced world, where instant results often overshadow long-term gains, Buffett's wisdom stands as a beacon, illuminating the virtues of patience, vision, and the irreplaceable advantage of an early start in the financial journey. As we draw this exploration to a close, it becomes vividly clear that Warren Buffett's financial success isn't solely the result of his exceptional investment strategies or choices. Instead, it lies deeply embedded in his unwavering principles, an ethos that champions simplicity, prudence, and long-term vision. By embracing the lessons of frugality, evading the allure of short-term gains, and valuing the irreplaceable boon of time, Buffett has carved a path that anyone, regardless of their financial stature, can emulate. So whether you're taking your first steps into the world of finance or seeking a recalibration of your investment journey, let these timeless tenets serve as your compass. Remember, the shade enjoyed today is the fruit of the seeds sown in yesteryears. Embrace these lessons, and perhaps your financial legacy will one day parallel that of the Oracle of Omaha.